We're going to start off, we're going to go to China. We're going to start in China because Tom Orlik has been staying up late in Beijing to be with us. Tom, thank you so much for coming here tonight.
My pleasure.
I appreciate it. All right, so you have a story today. This is a story really at the top of the homepage on WSJ.com about China, their their currency reserves. Let's talk about this. Give us the details of what you have.
So every year, the U.S. Treasury conducts a survey where they try and find out how much U.S. securities different foreign countries have. Normally, what that ends up saying is that roughly 2/3 of China's FX reserves are in U.S. Treasury, are in U.S. securities, mainly U.S. Treasuries. The latest annual survey came out earlier this week. We ran the numbers, and what that suggests is that we've gone down to around 54% of China's FX reserves parked in US securities. And what that suggests is that there's been a very sharp diversification away from dollars, maybe into Eurozone debt, over the course of second half of 2010, first half of 2011.
Right now, and Tom and Vincent, I want to get your opinion on this too. Yeah, I mean, we've always been warned about this happening, right? That everyone said, oh my God, things are going to go bad when the Chinese stop buying US dollars. Well, it appears that it's happening, and I don't see any real problem yet.
No, actually, my concern, I think, is less about the U.S. and more for China, because, Tom, if they're diversifying into euros and the euro comes under significant pressure, is that going to pose a problem for China, given their reserves, et cetera, and how they invest abroad?
Well, I think that's completely right. China has diversified. That's what the data suggests, but the sky has not fallen in. Yields on U.S. Treasuries remain low. The dollar hasn't collapsed. Timothy Geithner hasn't had to get out his begging bowl and trek over to Beijing to ask for the mandarins to carry on financing the deficit. But I think one of the reasons for that is that they've diversified at a time when demand for US Treasuries as a safe haven has been extremely strong, at a time when the Federal Reserve itself has been buying very large amounts of Treasuries. So the question is, when those factors go away, does the situation look so pretty?
Right. Now, I'm sorry, Tom, I want to talk about the other half of this too, which is China's current account surplus. You have another story, I think it's a Herd column, talking about how their current account surplus has really gotten much narrower than it used to. It used to be around 10%, now it's a little under 3%. Where's that money going?
So China's current account surplus was the kind of smoking gun which convicted China of having an undervalued exchange rate. 2007, we had a current account surplus of 10% of GDP, really enormous. The latest data for 2011 shows the current account surplus disappearing. 2011, we've got a current account surplus less than 3% of GDP. So China's rebalanced with the rest of the world. The question is this good rebalancing or is this bad rebalancing? What lots of people say is that it's bad rebalancing. China is consuming more, it's investing. That's not sustainable.
Oh my God, we're losing Tom there, but I know what he's saying. What he's saying is that a lot of this has been internal investments, right? The Chinese have been, blowing out the doors to put money into their own economy. But what they're doing is they're basically building ghost cities. They're building entire cities from scratch that can house 1 million people and nobody lives there. A lot of malinvestment.
It begs the question, is this the sort of real estate bubble that we faced in the United States in 2008, and is this going to impair China going forward? Right. It's difficult to...
we have Tom back.
Do we have him back?
Tom, before we let you go, let's. What's your last thought on this? What's the most important thing we should take away from this?
Well, I think the main takeaway from it really is that China has succeeded in diversifying its exchange reserves. The question for the markets is really, where's that money going? The obvious conclusion I draw is that China's been doing a lot more to support the Eurozone than anyone realized.
All right. That's a good point. That's a good point. Let's leave it there. Tom, thank you so much.